Hey, how's it going, everyone? It's Rodney Leandro here, Rodney Mastermind, bringing you a new video for the weekly forecast of the Forex analysis pairs that I am looking at. And what I would say is, if you want further details in terms of actual entries, then I do have a free Forex Signal group, and I also do mentorship as well. So if you're in the Signal group or part of the mentorship program, then you will get the actual entries. First thing you always want to look at is just, maybe dailyfx.com and Forex Factory. So you know what news is going on for the week, so you can prepare. And if you want to find out more information about any news, you can click on the folders, and then it will give you more information about the actual news. So look, if you click on a folder, it will give you some information. Or just Google these words. Google these words, and you'll be able to see more information upon the actual information that you're looking at. And then Daily FX speaks about some things as well. So look, this was from the 3rd of October, talking about gold fundamental. Outlook is looking bearish. How I remember it is bears hit down, bulls hit up. So bulls are buys, bears are sells. That's how I remember it. Short, S sells, long, LB buys. So yeah, that's how I remember these little things. So yeah, look at this information, man. It's important. And Google anything you don't know. So like GDP, so gross domestic product, interest rates, unemployment, what it does to a currency. Look at these things because they will affect some trades that you're in. So we'll quickly do some analysis, and then yeah, any questions you have, just hit me up on my Instagram or leave a comment in the comment box and I'll respond. So as we can see, gold is trending downwards. It's making higher lows and lower lows. As you can see, higher lows and lower lows. There was liquidity here that has been taken out, but price may need to go back down there again. So if we actually go into the 4-hour, we can see that it hasn't completely mitigated from the last entry that it's had. So yeah, we're looking for a buy here. Risk to reward is 1 to 7. So you can win once. It's going to take 6 trades to make up for that loss if this trade goes the right way. And what we see price doing here is a short. So there was liquidity here as well that's now been taken out. Last up before the down move, they come back to mitigate. So yeah, look, in the 30 minutes they've come back to this area, and that's what we're waiting for on the sell. But generally speaking, yeah, the buy is a retracement, the sell's an actual continuation of the market structure. But if price wants to break out of this area here, we look for it to go up to this area up here, the last up before the down move. There was a lot of money put behind here. So we know that they need to go back up there to clear these orders. Or normally when price slips like this, it may need to be refilled, restructured, and so on and so forth. So there's some ideas for you on gold. But as we saw, Daily FX was saying that gold's looking bearish. So either sell here, sell there. That's what we are looking for. And if we go to GBPCAD, we'll go to the daily. GBPCAD has been trending down, and we had a good trade for that. I think it was from. Let's go to the 4-hour. Last week we had a good trade for it. Caught about 200 pips. Which area was it from? Was it here? I think it might have been there, or it might have been here. So yeah, we caught some good sells as it had broken liquidity. But yeah, if we go to the daily, we can see that this has been bearish as well. Look at that for trend traders. 1, 2, 3. After the rejection candle, get in for a sell. Maybe wait for the rejection candle on a 1 hour. Yeah, don't take it on a daily. But look, because yeah, if you took it on a daily, I mean, if it was from the rejection candle, you could have risked 28 pips and maybe gone for 280 pips. That would have been good risk to reward. Or zoomed in to get a bear entry. But yeah, so what we see now, where price is at, is created its equal highs. And look, this was a nice trade as well. So price came down and took out all of this liquidity. The last down before the up move is the institutional play. They came back. They just touched this area, or it was a wick entry. And look, 1 to 5. 1 to 5, good risk reward. So yeah, that was a decent buy. So now we're looking for a sell here as they've created the equal highs. And this is the next area where the institutions may be looking to go to. There is a gap here as well though. So they may come back to this area and price might react here, but we're looking for 1 to 6, a sell right there. Let's see what Euro AUD is looking like. So what I normally do, I start on a daily and then I zoom into maybe the 4 hour, the 1 hour, or the 30 minutes to get a more precise entry. All right, so where's Euro AUD? Okay, Euro AUD is right here. So yeah, this has been consolidating. I mean, it was doing lows, but now price is consolidating, as you can see. But yeah, so we're looking for price to come back to this area to mitigate these orders. If you actually go into, I think it's the 1 hour to 30 minutes, you can see a bearish institutional play right here, where the last down before the up. So waiting for price to come back there, so we can get into a buy. Or if price decides to come back up to this area here, then we will wait to sell it. If it comes back to this area here and then goes down, we'll wait to sell it. And the risk to reward is 1 to 13. So yeah, it's a good little trade. I mean, you can win once, lose that trade 10 times, depending on your lot size, and you know, it wouldn't still be equivalent to that win. So risk to reward is always the most important thing. And let's quickly have a look at indices. But you know, with indices, you need a bit of a bigger account because the pip count is points. The points that the market moves with indices is quite volatile. So as we can see, look at that. Equal highs, liquidity, stop losses here, and maybe, you know, buy stops. So look, sell, stop losses, and buy stops. So what the pattern was created was equal highs. They've been taken out, so stop losses were hit. Liquidity, money's been taken. Last up before the down, go back up to mitigate. So there's a nice sell here, 1 to 8 risk to reward. But as said, you do need a decent account to trade indices. And if you want to find out what lot size you can use, then use my FX book calculator, the pip calculator. Then you can actually work out what lot size you can use. But yeah, you need certain brokers to actually trade indices on smaller lots. So yeah, for instance, Vantage. All right, and then what we're looking for here is a buy as well. I think we saw this. Was it on the daily? It may have been the 1 hour. But yeah, we're looking for a buy as there was an institutional candle here, and when we zoomed in, this is the area that we're looking for. All right, and then we have CADCHF. So back to FX. As we see, we're waiting for the continuation of these lows right here, and you can see, you know, market is trending and down nicely. Another easy one for a trend trader. So yeah, any strategy works as long as you work and you understand it and you follow it and you're disciplined and you have risk to reward. I'm telling you guys. So yeah, what we're waiting for is, as we can see, liquidity was created, taken out. Liquidity has been created again, taken out, coming to the last up before the down, and that's a 1 to 5 on a sell, and it's making a pattern of a higher low, lower low market structure. And then we're also waiting for, going to the 4-hour. Always look at different time frames, but get in lower time frames for the actual entries. Okay, so we saw that there is the last down before the up move. It was a very small candle. That's a 1 to 6, looking for a buy there. If we just do that, we can zoom out. And we can see, yeah, so liquidity has been created there. Liquidity was created here, they got taken out. It's touched it once. Price may come back there again, touch it again, clear out some more liquidity. The banks and smart money will break even on their institutional trades, their manipulation trades. And we've got another area here where there was liquidity. It got taken out. Last down before the up move. If you scale in, I think it was to the 1 hour to the 30, you can better see the last down before the up move there. So that's why we're actually looking at that buy right there. Let's move on to Euro GBP, because that's a good one. And then we can look at maybe Euro USD, GBP USD. Okay, so in Euro GBP, we saw a lot of liquidity there. Look at that, got taken out. Last up before the down. It just missed this entry here, so it may still go back up there to actually clear out this order. But whoever took a market execution there, yeah, you probably made about, because this happened last week. I called it out last week in a single group. Probably made like 150 pips, risking about, yeah, it would have been a, let's say, 20, 30 pip risk. So that's not too bad risk to reward wise. And now there's actually a potential buy in this area. It's just a small one, 1 to 3 risk to reward. As we saw that there was, is it on a 1 hour? There we go. Look, last down for the up move. It's come back there to mitigate, and it may start making its way up. Here's a stop loss area. So right now it's in a bit of drawdown if anyone wants to take that. But I mean, if you take it now, then it's not going to really be no drawdown, as it's literally on the entry. But of course, once I post this, it will probably be a bit different. So yeah, we can see that liquidity. Boop, price dropped into it, and then we zoomed in to really see, you know, the last candle that actually made price drop there, that manipulation, that money that was put there, and the banks are now most probably going to mitigate. Euro USD. Euro USD. So we're expecting potentially a short up here or a short up there and a buy down here. Let's go into the 4 hour. So wait, we'll go back to the daily. So we saw a lot of liquidity there, got taken out. Go to the 4 hour. So you can really see the last candle that done it. That's the last down for the up move. And we're waiting for price to come back down here to mitigate. I mean, if you were in the market, you could have got in for a sell here as well, because as you can see, but the liquidity wasn't, I guess this candle did kind of take it out or go there. So maybe you could have went into the 1 hour to further see. Look at that, last up before the down move. It just would have missed the entry if you had an entry on the open of the institutional candle. But you could have got in for a market execution. And let's say you wanted to risk 50% of the institutional candle about there. Well, look, it's such a good pip count. You could have risked 20 pips to make, it's probably going to go down to that entry. So let's see where that entry is going to finish out. Or maybe it will go up to this area here. So you would have risked about 20 pips. Where was it? It was somewhere up here, wasn't it? Let's go back to the 1 hour and we'll just mark it up just for illustration purposes. So bam, right there where that red line is. We'll go back to the 4 hours. So yeah, you would have risked 20 pips on a sell to be potentially getting 107 pips. So that would have been a good risk to reward. And what you want to do when your trades are in 40 to 30 pips in profit, you want to move your stop loss above your entry. So it's risk-free, meaning that if price reverses, if price hits your stop loss, you won't lose money. You won't make too much money. You may break even, but you won't lose. And, you know, that's what you want to be doing. And if you feel confident about your analysis, about your bias, then re-enter if that does happen. And just re-enter. All right, let's look at GBPUSD. Oh, that was oh no, that buy just literally hit the stop loss, but maybe price might come there again. So we had the last down before the up move, kind of, or maybe it's starting to come down to re-enter, or it could have entered here maybe, and then it's gone. Could have done that, and it's done about 200 pips. But yeah, if it does come back down there, we can get in for a buy. And there was imbalance in that area. So when there's gaps in the market, they must be filled. Those are targets, liquidity and gaps. So we're either looking for a short right here, as I think it was on the daily or the 4 hour that there was a nice candle within that area. I thought, hold on, was it 4 hour? There was a candle just above the liquidity. So if I zoom, yeah, I think, was it this candle? It was probably this candle. Actually, that sell is literally, so look, we have the liquidity here, the equal highs. Then what we have is imbalance. There was only selling, no buying. So that means a gap in the market, it needs to be filled. Those are targets. Liquidity are targets and imbalance. So price, and then look, there's an up before the down. So price may go up into the gap area. But that first sell, I think is just, maybe that sell might need to be re-looked at. Yeah, it may need to be re-looked at. It's probably meant to be up here. So what was that entry price? 1.30788. So yeah, so where that imbalance is, that's all 1 to 4, decent little trade. Or if price breaks the imbalance and continues to go up, then we'll look for a short at 1.33630. And then if it does come back down for a sell in this area here, I mean for a buy, then we'll get in here for a buy. So 1 to 7 trade. And let me just zoom out so you can kind of see why we're looking at that. Or maybe go into the daily. Yeah, as you saw, there was liquidity there. So yeah, we'll see what happens. Let's quickly see what the DXY is saying. Let's quickly see what the BXY is saying. If we go into the BXY and go to line chart, you can't really see. We can see that the pound has been going down, but now it didn't break it can't, it looks like it's equal. So it didn't kind of break the low, and now it started going back up. It could continue now to the upside, and there has been news that's been helping the pound in terms of money being injected into the UK economy. So the pound may start going up. If the pound starts going up, all GBP pairs will go up, and anything that has GBP, like Euro GBP, will go down. And then let's put this back. Candles, yeah, so many gaps. That's why I look at it with lines. And now let's see the DXY. If it wants to show us. I don't know why it's coming out so small. That's better now. That's better. So we saw last down for the up, hasn't come back down here. Created a bit of liquidity here. There was liquidity here, got taken out. Last up before the down, went back up there to literally mitigate. So maybe we can see now the dollar will start going down. And if the dollar goes down, gold will go up. And anything that has USD second will go up. Anything that has USD first, like USD JPY, that will go down. Have I done analysis for USD JPY? I have, so we'll quickly look at that, and then we'll end it there. Look at that. Now, price hasn't come back up there yet, though. Nice little short. Price is here right now. Last down before the up. There was some liquidity within this area. The price has been touching. So yeah, the liquidity was more or less up here. And price has gone into that area. So that's why we're looking for a buy here. If price wants to go down into this huge area of where it dropped into and came back up, then there's a buy here as well. It's 1 to 11, it's 1 to 7, risk to reward, 1 to 8, risk to reward there for a sell. Let's go into the 4 hour to see if we can see some more information. Here. Now it's done before a huge up right there, and it's below the liquidity zone. So maybe this may be a better entry. I'm just gonna mark it out, and then we can look at that later on. We'll look at that later on. Right, let me zoom out. Go back to the daily. Okay, that red line is there. I can see where it is. So it's right within the zone. So yeah, maybe we may change this entry and look for that lower entry. So maybe I'll label that FU just so I remember. Then it's right there. Okay, so I'll leave it there for now. Any questions, put them in the comment box. And yeah, if you're new, or if you need help, it's always good to have a mentor. Mentors allow you to reduce the time it takes for you to actually be successful, and it can reduce mistakes, errors, and there's guidance because, you know, the mentor's done what you want to do and they can help you. So yeah, I do mentorship. Just hit me up on my Instagram, mastermindr_. Like, share, and subscribe. And then there's also the free Forex signal group as well. You just need a live account on my broker, so it is free to trade. You need a live account of any broker, so it's free value, free ideas, entries, and you can actually communicate with myself as well. But yeah, that's everything for now. Just hit me up with your questions. Thank you very much for your time, and just wait for the next video. More value coming soon. Like, share, and subscribe. Thanks, guys.